Welcome everyone to today's video in which we're going to talk about ENPHASE Energy, ticker symbol ENPH, because it's a very interesting company and they are reporting earnings tomorrow. This company, I would say, is now a small cap or a mid cap company as the current market cap is $4.2 billion, which is down 46% compared to last year. The revenue compared to last year grew 21%, net income 218%, and EPS 233%. And the current 4P is 17. So it looks cheap for a company that has this amount of growth, although we'll talk later about the valuation with a discounted cash flow model, and analysts have them rated as a hold with 22% upside. And if we take a look at the stock price, it has been very crazy for ENPHASE, which has been around since 2012 and reached an all-time high of $336 per share, meaning 23,000% returns at one level. But since that all-time high, the company has been on freefall and has fallen almost 90%, and it is currently trading at $35 per share. The reasons for this is because their financials took a massive hit. If we start with revenue, the revenue was growing at a very fast pace and they reached $2.3 billion in 2022. However, as you can see in the next 2 years, the revenue basically dropped in half to $1.3 billion. Now, I will say that it seems like revenue is back to growth mode. In fact, last year they grew 20% the revenue, and if we take a look at the quarterly revenue, it seems like in the past couple of quarters, they have been getting back to that growth mode. And the same goes with their profit. Their net income was negative 10 years ago, and they managed to reach $438 million in net income. Then it took a huge drop to $102 million, and it is currently at $195 million. So again, it seems like they are back to that growth. Now, this company has even more free cash flow, which is definitely a positive, currently at $219 million. And this company has great margins. Gross margin is currently at 31%, profit margin at 12%, and free cash flow margin at around 14%. And by the way, very quickly, in case you don't know what ENPHASE does, their main source of revenue is these microinverters, which are ENPHASE's core products. They convert the DC power generated by solar panels into AC power usable in homes and businesses. Now, they also have battery storage systems, which is that they sell energy storage products, such as its IQ battery line, which store energy for later use. In fact, the energy storage shipped has seen tremendous growth in the past year, growing from $324 million in revenue to $708. And as you can see, the revenue growth in the last quarters is insane. 57%, 89%, 89%, 48%. The part of their segment that wasn't growing as much is the microinverters, which was decreasing since that all-time high in 2023. However, last quarter, they did positive revenue growth in this aspect, so let's see if they can continue. Now, in terms of revenue by geography, what's driving the majority of the revenue is the US. However, what they have been struggling is international revenue, which is not stopping decreasing. So I think this is going to be very interesting in the next earnings to see if they can turn this around. But I really like that they are in the solar energy sector because I believe it's a sector that is going to keep growing in the future. In fact, it is expected to keep growing at around a compounded annual growth rate between 6 and 25% over the next 10 years. Another positive about the company is that it has a great balance sheet because they have $1.4 billion in cash and 1.2 in debt, so they are in a great financial position. And by the way, before we look at the valuation, we're all showing all the data is stockanalysis.com, the best place for it. You have my code in the description. Quick overview on valuation. They are currently trading at a P of 24, forward P of 17, and price to free cash flow of 22, which could be cheap depending on future growth. Now, if we take a look at the financial forecast, analysts are expecting around double-digit revenue growth for the next 4 years, which is great, from $1.35 billion to $1.68. Now, as far as profit, also very good growth from $2.71 per share this year to $3.47 per share in 2030. But in order to take a deeper look at the valuation, I use my spreadsheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $18 per share, middle 31, and high 48. And because the stock is currently trading at $36 per share, this means that if my low assumptions occur, you would get a negative 1.5% annual return on your money, middle positive 7%, and high 15.5%. Now, I believe my assumptions are reasonable as I have ENPHASE growing revenue between 5 and 11% over the next 7 years, averaging a profit margin and free cash flow margin between 10 and 16%, and I assigned the PM price to free cash flow at the end of the 7 years of 15, 17, and 19. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And in conclusion, I really like the sector that ENPHASE Energy is in. I also like that the market cap is only $4.7 billion because it means they still have a lot of room for growth. And although it seems like revenue and profit are back on track to that growth they used to have before, I think the valuation is a bit expensive because there is still a lot of unknown about the future of the company. I hope you found this video valuable. Let me know what you think about ENPHASE Energy in the comments, and I'll see you in the next one.